All right, well, thanks everybody for staying around for the last presentation of the day. I am pretty excited about this. I think this is interesting. For those of you that aren't as deep into payment processing, I think this will actually be relatively educational. So hopefully you agree. So it's highly likely that you're paying too much for your processing. I believe that most of our Chargent customers actually do have the ability to cut your rates, and we want to talk you through what that would look like to get that done. So a lot of us, when we started processing payments, were either a small business, we were just getting underway, and we would go to Stripe, or we'd go to authorize.net or whatever, and basically sign up for whatever they offered and just hope we get through the underwriting process, and they let us process credit cards. You can imagine that's didn't give you a whole lot of leverage, so you're probably not getting the best rates. So as you've continued to evolve your business, it's time to go back and take a look at what we can do to improve those. So what do typical rates look like? A lot of times folks are going to pay something similar to 3% of the total transaction fee and then about a 30% gateway fee. I've heard of some customers paying as much as 3.8% per transaction, as well as a 50 cents per transaction fee. And that's kind of crazy. So to start to understand where all the money goes and who's involved, I want to kind of talk you through this. So in industry jargon, Chargent's what's known as a virtual terminal. Obviously, we're a virtual terminal that sits inside of Salesforce. And our job is basically to take that payment that you want to run and take it out to a payment gateway. The payment gateway has to make an instantaneous decision. So we didn't need payment gateways until 1991 when we did the first e-commerce transaction, and then all of a sudden the payment processors needed somebody to front end them so that a e-commerce transaction could take place. And so their job is basically a payment gateway's job is basically to run out to the payment processors, the Visa, the MasterCards, the American Expresses of the world, and ask them, will the issuing bank, so the Capital Ones of the world, the Chase Freedom, these type of ideas, will those issuing banks, will they fund a payment out of a particular account to go to your bank account? And that all needs to happen instantaneously. So that's basically the flow. That's how it goes. And how does that equal into fees, right? Well, everybody along the way is going to make their money, and so what are all the different types of fees you could potentially be looking at paying? Well, first of all, you want to think about gateway fees. So there's a per transaction fee that the gateway is typically going to charge you. If you're tokenizing on the gateway, there's also a tokenization fee commonly with the gateway. Sometimes it's all baked into one fee, so on and so forth. And so these are kind of some of the first pieces to take a look at. Keep in mind that when your gateway fee, so we say 30 cents a transaction or whatever it is, often the gateway is going to charge you, for an authorization and a capture, charge you for a refund, charge you for a void. And if you have to try a card multiple times, you're probably going to pay multiple times for each of those trips to the gateway. Talk to your gateway provider and try and understand what their model is for that. It does change from gateway to gateway. And there are some gateways now offering a monthly fee instead of these per fee transactions. Now, we'll get deeper into this. There's a thing called interchange, and those interchange fees can't be negotiated. We'll talk more about that in a moment. But in terms of the markup that they're getting on the gateway, there are some solutions that do a monthly fee where you don't any longer need to pay per transaction. So the other thing is, or another thing is, incidental fees. So I got a list here: chargeback fees, paper statement fees, NSF return fees, identification service fees. First off, when you're going to negotiate these with your gateway, just straight up ask for discounts. Tell them, look, I would say something like, chargeback fees I'm not worried about. I'm in a low-risk business. I hardly get any chargebacks, so I'm not concerned about that. But, I don't want to pay a paper statement fee, so send me an email with the thing and things of this nature. But just ask for discounts on these incidental fees and see what they say. You usually can, but the other thing is make sure you fully understand them, right? So there may be things you can do to, for instance, voice authorization fee. Most people don't even know what that is. But if you don't train your reps on how to do a voice authorization, you would never have to pay that fee, right? So you can do some things like that to try and understand that. It used to be pretty popular to charge setup fees. If you've gotten a contract with setup fees, just tell them you won't pay them. You could easily go Google setup fees and gateway setup fees, and most gateways out there don't charge them anymore. So you could pretty easily make an argument that, hey, nobody else is charging them. Why are you trying to add them in? So you should be able to get rid of those straight away. So let's get into the meat of the thing. So those are kind of, you can cut off some minor fees, but what it really comes down to are the percentage points that you pay per transaction. So if you take a look at the donut chart at the bottom of the slide here, what you're looking at is you've got an interchange fee. So Visa and MasterCard, all of those Visa, MasterCard, the card networks, they charge about 13 basis points, 0.13 on average. There's definitely differences, but they basically charge 13 basis points per transaction. Every single transaction that ever gets done, whether that's on the internet, whether it's at the gas pump, whatever it is, that's how they make their money. And that's what we call a network fee. And then the interchange fee takes that network fee and adds the issuing bank's fee. So you've got an issuing bank who, let's say you're dealing with a Chase Freedom card who's giving you whatever your percentage back is in points. They got to get that back somewhere. The interchange fee is where they get that back. Okay, we'll talk a little bit more in the next slide about some of that, but that's your interchange fee. And then finally, the place where you're actually going to be able to do your negotiation is the margin, the payment processor fee, and what their margin is. So how do we negotiate that? So one more note on interchange fee. Here's some examples. So one of the less expensive ones, so CNP is card not present and debit card exempt. So 1.7% plus 15 cents per transaction. This is the fee Visa is charging. Well, go ahead. Let's say you're a Bank of America customer and you get a debit card. This is what Bank of America is charging the merchant, you the merchant, to use that particular card. Same thing's true with card not present rewards card. Now we're talking about Delta Airlines cards. We're talking about the Capital One, what's in your wallet campaign. All of those high rewards cards. You're paying quite a few. It's quite a bit more expensive, right? Another 70 basis points here. You're paying to use that card. These are non-negotiable, right? The only way to reduce your interchange fees is to increase your volume significantly, like over $500 million a year in credit card volume. You can start to negotiate those. Actually, you don't get to negotiate them. That was incorrect. There is a discount you get once you pass that mark. They're not negotiable. These are non-negotiable. And this is just one more graph to kind of walk you through that and help explain that, most of it's set by the issuing bank and a little bit of it's set by your acquirer. Acquirer is your payment processor. So industry jargon for payment processor, your merchant bank is acquirer. There's about 10 names they go by, but those are some of the common ones. Anyway, so what are the different types of processing fees that you could possibly be looking at? Most customers, so if you look at like a Stripe, a Authorize.net's basic offering, you're going to be at they call that a blended, so 3% plus 30 cents per transaction. They're basically banking on you not getting very many rewards cards and getting a bunch of other types of cards and making their money there. If you were in a business where somehow you knew that you were getting a bunch of rewards cards, so you were a travel agent, everybody loves to use rewards cards for traveling, it's possible that a blended rate actually makes a lot of sense for you because there's only that 30-point margin that they're getting. And for a low volume shop, that's really not a bad margin to pay to your acquirer, your merchant bank. So there's models where blended or flat rate does make sense. A lot of us are probably on tiered. So if you're a Chase or Bank of America or one of the other major banks customer, and you go to them and say, hey, I need payment processing for my business, they very likely gave you a tiered model. And tiered means that they broke it into qualified, mid-qualified, and non-qualified transactions. And that has to do with, if you give them a business card, they tend to consider that a non-qualified transaction unless you pass what's known as level 2 and level 3 data. It really comes down to how much risk they think they get on the card. So if you've got a business card, a P card, a purchase card, or a procurement card, they think you care a little bit less about it because it's not your money. Maybe you left it on your desk and the janitor picked it up and ran charges that night or something like this. I don't know. But that's what they imagine is going to happen with a business card. And so they give you a non-qualified transaction to help offset the fraud that they think they're going to have to deal with on that card. And one of the ways, if you're on a tiered model, It is possible a tiered model is the right one for your business. I haven't come up with a great example for that one yet, but it is possible that's the right model for you. And in these situations, you want to start looking at how do you take a non-qualified transaction and make it a mid or a qualified transaction. That usually comes down to how much data you pass back to the gateway, thereby lowering their risk. So if you've got a PO number, if you've got an invoice number, if you've got these other things, they assume that that is a less risk, less chance of being a fraudulent transaction, and they'll give you one of these other types. Okay, so those are probably the two most common ones that are out there. I think the other ones that tend to make sense for most businesses are ones called commonly called a cost plus model, or an interchange plus in technical speak. And basically that means that those interchange rates we talked about, you negotiate the margin. So you agree that you're going to pay them 30 basis point spread, or you're going to pay them some number like that. And they will mark up every single transaction exactly that much. For a lot of us that are doing business-to-business transactions, this is by far the best model, because we can leverage the fact that a lot of small business owners in particular are going to be using debit cards. Those are typically low cost, so you want to be on cost plus for that. You keep your interchange, plus the spread very low. And then the other thing is you can start to leverage the level 2 and level 3 data, which we're going to talk a little bit more about here in a second, to start to continue to bring those down farther and farther. In a lot of cases, interchange plus makes sense for most businesses. In general, our recommendation is to get yourself onto a cost plus model. Those tend to be the best. There is a new model that's come up in the last 5 to 7 years that's known as cost plus zero, or a subscription model. So there's a couple of merchants out there. Fat Merchant and Payment Depot are two examples where if you fall into their range, less than X number of transactions a month, they'll give you a $29 per month gateway fee. So however many transactions you're running, whether those are refunds, voids, whatever they might be, charges, authorizations, you have a relatively static amount that you're paying them. So there is no, whatever the interchange is what you're going to get paid, is what you're going to pay. So again, makes sense to focus on this level 2, level 3 data that we were talking about, especially if you're doing business to business. And then finally, they will also typically charge a 25 cents transaction fee. Keep in mind that you're already going to be paying typically a 15 cents interchange transaction fee. So they're only taking a 10% margin per transaction. Okay, so those are the 4 basic models. Most of us, it makes sense to be on interchange plus, and then it really comes down to how much you can negotiate that spread with them. So level 2 and level 3 data is not something most of us think about on a daily basis. And I guess there's a lot of things most of us don't think about on a daily basis, but this is one of them. And so but the way that it works is that the way to lower your rate is by lowering their risk, right? The less fraud they have to deal with on a particular type of card makes it more profitable for them and allows them to lower your rate, is what it comes down to. So these are basically data fields that you can pass. So at Chargent, certainly with Vantiv, we're working on it with Link to Pay and some of our other providers, we always pass level 2 and level 3 data when it's available. If you're on a gateway that we're not passing it today, let us know. We'll get that sorted out for you. But if you're on an interchange plus or a subscription model, or even sometimes even those tiered models, level 2 and level 3 data can help you. So what are we talking about when we say level 2 data? So these are the 3 fields that we need to be passing for level 3, or level 2. There's actually quite a few other fields, but they're not relevant to you, the merchant, or to us, Chargent. Your acquirer is going to be passing some of that data. Some of it we can pass in the background for you, but tax amount, a customer code, a unique number for that customer, also a full billing address is going to help you get better qualified transactions. And then on level 3, there's quite a bit of other stuff that you can pass along to your acquirer to work on getting your level 3 pieces. So how much was the discount? Was there a freight amount, duty, all the things you see on the screen here today. So we do have this available with some of our gateways. Just shoot us an email and let us know what gateway you're on if you'd like to know more about those. And we can help you with that. So there's a couple things to think about when it comes time to negotiate that contract. So, first off, I got to say, you got to negotiate a decent out clause for yourself. Okay, so there are some providers, in fact, most merchant banks want to negotiate an exclusivity clause. If you are in what they consider a high-risk business, they're not going to let you out of that. You're going to have to commit to an exclusivity clause. And that's really to keep you from doing what they call load balancing and sending certain transactions one way and certain transactions another way to balance your chargeback so that they don't quit serving you, which, I don't know if it's exactly fraudulent, but they definitely don't want you doing that. And so if you're in a high-risk business, you're going to really struggle to get rid of this exclusivity clause. If you're in a lower-risk business, you should be able to make a case and get them to take that off. Underwriting's not going to love it, so you need to be a little bit careful with it, but you could do that. The main thing is you want to pay attention to what the out clause is. So, typically speaking, they're going to want you to pay a certain amount of money to get out of it. And, I've seen low as like $250 to end in the contract. We've seen very high too, and it comes down to how much risk that they think you have. And so if you want to be able to go back and renegotiate at a later point, you do need to negotiate a decent out clause for yourself to begin with, or else you won't have any leverage when it comes back to negotiate. They'll know that you have to pay them $10,000 to get out of the contract. They don't need to move because it's not going to be worth it for you to pay them $10,000, right? But if it's $250, it makes it a lot easier. So when should you renegotiate? If you went out and signed up for Stripe or one of these other kind of off-the-shelf gateways, if you will, I just made that term up, but one of these kind of general gateways, you can just go sign up online. Take a look. If you're already doing over $1 million in processing, somebody's going to be willing to talk to you about better rates. If you're doing more than $2 million, even your existing processor should be able to give you better rates. I remember one nonprofit I was working with, they were like, oh, they're charging us so much. And I actually said to them, well, why don't you just go ask for a lower rate? Like, they're charging you too much. I can't remember. She was paying like 3.5% or something. I was like, just go tell them you want to pay less. Like, they should do it. And she called me back. She's like, yeah, they paid me less. And thank you so much. And they never became a Chargent customer because now they had a better rate over there. But that's fine. They saved some money, and hopefully their mission benefited from that. But then I would say, like, at every $1 million after that, you should be able to go back. So at $2 million, and then like every million up to $10 million, I think you should be able to go back and get a little bit better rate out of your merchant bank. And then at $565 million, should all of us be lucky enough to be in businesses earning that amount of revenue, that's when you're going to start to be able to get your discounts on your interchange rate. I think it's like 20 basis points if memory serves or something like that. But it starts coming down at 565 million, 2.2 billion, 4.2 billion. So the targets of the world are obviously getting great interchange rates and then letting them steal our data, but whatever. So and then the other thing is just remember to take a look at this annually and make sure you're able to work through it. So those are some thoughts on kind of when to negotiate and what to think about. The other thing I want to encourage you to think about is, does it make sense for you to be doing, here in the States, ACH or, electronic fund transfer models? A couple things to think about here. You should never pay, especially on the ACH networks, a percentage fee on an ACH transaction. You should be paying less than $1 per transaction for an ACH payment. And there will be limits on how much you can transfer and so on and so forth, and be sure to get into all that. If you're trying to transfer $200,000, you're going to need your ACH underwriter to have agreed to that, things of that nature. And depending on your volume, you may or may not be getting to move them for $1 a transaction at that point. But if you're doing a fairly typical transaction, less than a few $1,000s per transaction, you certainly should be able to get somewhere between 50 cents and $1. One of our customers I know is getting 4 transactions per penny, but they're doing 1 million transactions a month. So they got volume discounting. So consider whether or not that makes sense. All right, so that's kind of what we're thinking about here. So just to recap, try and move to a cost plus 0 or a cost plus model if possible. Improve your level 2 and level 3 data collection and sending. Move to ACH or direct debit, whatever it is in your country, if possible. And always be renegotiating, kind of like always be closing. I tried. And so ABR, always be renegotiating. And those are some tips and tricks to hack your rates. Any questions? Nope, I bored you all significantly. You're welcome. Yeah, that's polite of you. Thank you. All right. Well, thanks, guys. We appreciate you. Oh, yeah.
This is a little bit unrelated, but the bus business I was working for talked to Costco about their rates, and they claim they don't pay interchange fees. Do you have any thoughts on that?
Costco said they don't pay interchange fees?
They told us that they had negotiated their way out of interchange fees. They were the only ones to have done it. Their other fees were higher, so it was still a balancing act of whether it was worthwhile.
You know, I'm not familiar with Costco's procurement, so I have no idea. It seems to me like Walmart would probably have an easier time doing that than Costco, but I have no idea. I don't know.
Didn't they just move to Visa too?
Did they?
Yeah,
Oh, Visa only?
American Express.
Maybe that's how they did it. Yeah, maybe Visa said no interchange if they just moved to them. I've not heard of this. Yeah, I don't have any insight on that. It's pretty interesting though. I mean, the thing about interchange is that it's not just Visa's money, right? Like Visa only gets 0.13% of those transactions. The rest of the interchange is all going to the issuing bank, the Chases, the Bank of Americas, and so on. So maybe Visa has that pull. I don't know. Yeah, it's interesting. I'll look into it now, though. Appreciate the question. Wish I had a good answer for you. All right, well, hey, guys, thanks for coming to Payment Summit today. We really appreciate it. And have some drinks. Enjoy.